Alright, I want to show you something. This message right here, this was 5 years ago. So at that point, I had just decided to become a day trader. I didn't know what day trading was, I didn't know what a candlestick was, what a market structure was, but I had a real raw motivation to figure out day trading. So the first thing I did was I looked up online and tried to watch some videos and figure out who I wanted to learn from, somebody that could be my mentor. And that's when I came across 𝗥𝗘𝗖𝗧𝗧, who is my first mentor. And that is the message that I sent to him on Discord after joining his program. Now it has been 1,482 days since I sent that message. And since that date, I've taken thousands of trades, I've made every mistake possible in the book, and through these mistakes and chart time, I have learned to become profitable and build consistency. And in this video, I'm going to share with you the 10 core lessons that have really stuck with me in the last 5 years. And these are lessons that have kind of rewired my brain and have really influenced the way that I do day trading. And I'm going to share it all with you in this video. And whether you are a new trader or you've been trading for a while, I think that these 10 core lessons are going to be very beneficial for you. And I hope that you watch to the very end, because the last one on the list is one of the most important lessons that I've learned, and it could save you months or years of frustration. So let's get into it. If you're new here, my name is Houman, and I went from working in the Silicon Valley to building a 7-figure e-commerce business to now becoming a full-time day trader. And this channel is all about documenting that journey and sharing everything that I learned along the way. So if that's something that you vibe with, definitely go ahead and subscribe to the channel and join me on this journey. Now the first one may sound simple, but this one alone took me a couple of years to really get, and that is to trade with the trend. We have all heard the saying that the trend is your friend, but in reality, not many traders apply this consistently in real life. We see that the price is shooting way up, we didn't catch the move, but now we want to catch the little retracement back down. Or we see the price crashing down and we say that the price cannot crash anymore, and we try to catch the bounce back up. And in both of these cases, what we are doing is we are trading against the trend. But when I stopped calling the tops and the bottoms and I started trading with the direction of the 1 hour, the 4 hour, and the daily, and the overall market structure, trading just became so much easier. It's basically like surfing. It's so much easier to ride the wave, to go in the direction of the wind, than to paddle against it. And when you're trading in the direction of the trend, it makes trading so much easier because you're not fighting the market. So for trend, I look for a combination of the daily bias as well as the market structure. Today is May 6, 2025. I would look at yesterday's close. So we have this 1,000 tick daily candle yesterday that closed extremely bullish. So coming in today, my daily bias is bullish. I don't want to go against a 1,000 tick move of yesterday, and it's just easier to ride the wave, right? And for the market structure, I noticed that when I'm doing intraday trading, if I'm taking 15-minute or 30-minute time frame trades, I usually look at the 1 hour market structure to basically dictate the direction of the market. And the best trades are when your daily bias and your market structure and your entry are all lining up together. So today coming in, I would have a bullish daily bias. So obviously I'm looking for a bullish market structure to line up with that. So here we see clearly that we had that. We are setting a series of higher highs, higher lows, as you can see here, and the price is just trending up. And you could look at it in different ways. You could draw a trend line here to take a look at it, or you could just simply look at it here and say that, okay, this is a higher high, and then we have another higher high, we have a higher low here, then we have a higher low here, and they're both basically the same thing. So when I'm coming in today, and the trades that I took today was all in the same direction, I'm looking for breakout trades. So it's so much easier coming in here and taking a long on the breakup structure like this and targeting the next level of resistance right here, right? Or you're coming again, you have the next level here, you have an opportunity again here, you could do the breakup structure. Again, you could target the next level of resistance. So there's so many opportunities that show up in one day, and that's basically riding the trend. This is on the 1 hour time frame, so there's going to be even more opportunities on the lower time frames. But what you don't want to do is you see this trend up and then you come in on the 5 minutes and you try to short this, which is what many people do. They would be looking at the 5 minutes, they see this big bearish candle, and they would try to short it like this, and they would be aiming something like this. And what happens is that the price just go back because you are going against the trend. So it's so much easier no matter what time frame you're entering your trade on. It could be on the 1 minute chart. It could be whatever time frame it is, but you want to line it up with the higher time frame market structure, which for me is the 1 hour time frame, and also the daily bias, and follow that because you want to go with the wave. You don't want to paddle against the wind. You want to go ride the wave, and it just makes trading so much easier. In some of the previous videos, I mentioned that for a couple of years, I was stuck in this annoying break-even stage in which I would take many great trades, but then I would give back all of my gains during a stretch of time where the market was going sideways. And the lesson number 2 that really helped me get out of this break-even stage was that I don't need to take a trade every single day. Now the market goes in different cycles. It's going to be trending market conditions in which the price is going up or is going down, which is great for trading. And then the price action needs to rest. It is these consolidations that could take a few minutes, a few hours, or a few days that get a lot of traders in trouble, including myself. And when I realized that I don't need to take a trade every single day, that's when it changed everything. So the way I would know that the market is changing is, for example, I would be looking at longs here, right? So I'd be coming here, the market is clearly moving up in upward momentum. You know, we're setting up higher highs, higher highs, higher highs again. But at some point when you are looking at the price action to break out, for example, right over here, right? So you're looking at this breakup structure, you would get a weird candle that comes in. You would get a bearish candle right after that. And then you would get a bullish candle. So kind of my cue after that, when that happens on the higher time frame, is that I start to zoom out and then see what is the market doing. Because when the market breaks out and breaks right back down and starts showing that choppiness, then that is kind of my clue that the market conditions are changing. And obviously you're not going to know right away that the market is chopping. It's going to take a few candles. So you might be getting a breakout and it doesn't work. But what's important is that you don't go on tilt. You don't just keep on, longing it, shorting it, longing it, and then blow your account, which is what happens to many traders. But after, one trade that goes wrong and you start seeing the price action, you zoom out and then you realize that, wait a second, the market conditions are changing. We are no longer trending on the 1 hour time frame. We are starting to go sideways. So at this point, what I start to do is I go ahead and draw a box at where it's chopping at. So it'll be something like, depending on what the price is. So I'll be doing something like this to just basically memorize that area, because tomorrow coming in, I might not remember that, hey, yesterday at this level, the market was choppy. So here, as we clearly see, the market was chopping from Friday, April 11th morning until Wednesday. So this is 4 days nearly of choppiness. So if you're not careful, these 4 days, you're gonna be taking max losses on so many trades and you give back all of your gains. And this is what happened to me for a couple of years. And I truly believe that this is the reason why I was a break-even trader, because I would be catching the big moves here. I would be making amazing trades, but then when the market condition changed, I wouldn't realize it, and I'll be zoomed in on, let's say, the 5 minutes or the 15 minutes, and I'll be trying to catch the breakouts, and I'll be getting frustrated. I'll be catching a breakout, then the next candle dumps on me. And here is where I would be just giving away all my gains. But now what I try to do is, once I realize this, I make a little box. I call this kind of my no trade zone or be careful zone. And in these zones, I go very low risk, or I will just simply stay out and I won't trade those days until we are clearly out of this range. We test it, and then here we get on the trending market again. And this is what I love to trade, because I'm a breakout trader, I'm a momentum trader, and this is where my strategy really thrives. I don't do well in the choppy markets, and it's gonna come to you with chart time, with experience, with just constantly looking at it. Your eyes get used to it and you start to be able to notice these things quicker. In the beginning of my trading journey, I wanted to see results fast. I wanted those juicy $1,000 days, $10,000 months, and I see the new traders coming in now also wanting those same things. And I don't blame them, because this is what we see on social media. TikTok, Instagram is filled with people showing off their P&Ls. Some are truthful, some are not, but they make it look easy. And because of that, we also think that trading is easy, trading is fast, but in reality, it takes several years. Now, for me, it took about 4 years to really start seeing consistency and profitability. And when I talk to many profitable traders, that 4 to 5 years also tends to be the same for them. Now, some people might get this faster, some might take a little bit longer, but on average, I see this 4 to 5 years being the average for when a trader starts seeing consistency. And also, when we think about it, this also makes sense with our education, because when we go to college, we spend 4 years learning a craft for us to hope to get a job. So why would we think that it's going to take 3 or 4 months to learn trading, which is one of the hardest jobs out there in the world? It doesn't make sense, right? So the lesson number 3 is to really have realistic expectations. And now when I talk to any new trader, I always mention that give yourself at least 4 years. It's true that it might be a little bit sooner for you, but realistically expect 4 years of frustration, of pain, of trying to figure out this trading game. But if you stick through it, it's going to be very rewarding, just like anything else. Now, this one was an absolute game changer for my psychology, and that is when I stopped measuring my progress in dollars and I started measuring it in R. Now, as you guys know that on my videos, I never talk about dollar amounts. I'm always talking about how many R's I'm making on a trade or how many R's I'm making per month. And this is a change that I made about a year ago, in which I completely removed all dollar amounts from my chart, from my journal, and I completely started focusing on the R, on how much reward I'm making on my risk. So let's talk about this. Let's say that on every trade, you're risking $200, and most of your trades, you're making 2 to 1. So on a winning trade, you're making 400. On a losing trade, you're losing 200, right? When you look at your data, you see that on average, realistically, you make about 10 R per month. So if you're risking $200, you're making about $2,000 per month. Now, if you're risking $200 per trade, might not be life-changing, but that risk could always be changed, right? You could increase your personal capital, you could increase your funded capital. So instead of $200, that risk per trade could be $1,000, it could be $2,000, it could be $10,000. It's really easy to change your risk, but what's important is that you're following the same process. So you would literally be doing the same exact thing. You're going to be making the 10-hour month. The only difference is that you have more capital to work with. So that is when my focus went completely in making improvements in my R and making it consistent, and at the same time increasing my capital. So what's important is that you follow your process, you get to consistency so that you're making the same amount of R per month, and at the same time you are increasing your capital. That way, next thing you know, you are making those amazing months, but you're not doing really anything different. You're doing the same process over and over again. And 𝗧𝗢𝗧 is how I journal my trades, and I highly recommend it. I should probably make a whole video about this as well, but if you're interested in it, go ahead and check the link in the description of the video. But as you can see in my journal and my trading data, there is no dollar amount. Everything is literally in R. And as you can see here, today I made a 2.12 R in 2 trades. You could see that my monthly stats 2.73 R. You could go to the previous month, you could see 6.52 R. I don't talk about the money at all. I am literally just focused on the process and how much R I could gain per trade, per week, per month, and that is literally all my focus. And as you can see here, there is an upward moving equity curve from the beginning of February, which is when I started tracking my trades here on 𝗧𝗢𝗧. So this is the equity curve that you want to see. You want to constantly see the equity curve going up. There's obviously some dips that are here and there, but in general, the equity curve is just sloped up, and everything is again tracked in R's. There's nothing about the money, and it really helps my psychology by focusing on getting as much R as possible on a consistent basis. Lesson number 5 is to trade what fits you. Now, we all have different personalities, we all have different styles, and the great thing about trading is that you could tailor trading to the style that fits you the best. I like to strategize, I like to get in a position and hold that trade for 30 minutes, 1 hour, sometimes 8 or 9 hours, and that is what I really like. It took me a couple of years to realize that, but what's important is that you try different things, get the chart time, and really see what kind of a trader are you. Are you a scalper? Are you a short-term day trader for a few minutes to a couple of hours? Do you potentially like to hold it for a longer duration like I do? Or are you a swing trader in which you are holding trades for several days? Now, to know all of this, you definitely need some chart time, some experience, but definitely know that in trading, it's not a one size fits all, and you need to trade what fits you and your life the best. The cleanest trades almost always start from chaos. These are the fake breakouts, these are the liquidity grabs, the stop hunts. And when I learned to detect these things before I entered into a trade is when things really change for me. Because if I don't see it, then most likely I'm the one being trapped. We have this very bearish 15-minute candle. I know that a lot of the traders are now looking to short. We go to the next candle here. Boom. Now we see a liquidity grab, right? So this candle came, grabbed all of the liquidity from here and pushed right above. This is what I mean by trap. So before it turned green, as you can see, there's a wick down here. So this was at one point something like this. It came down bearish. So what did the traders do? They came in, they saw that initial bearish close, then they saw that big red candle forming. They did not wait for that one to close, right? So they jump right in, and that's where they get trapped. So once I saw that liquidity grab and close, here I was looking for longs. So as you can see in both of these cases, I was looking for that trap. I was looking for that liquidity grab and align that with support and resistance as well as the overall market trend. So always remember, whenever you're taking an entry, whenever you are putting your stop loss, look for that trap, because if you don't see the trap, that means that you are the trap. Sometimes your trade idea is perfect, but it still fails. And the reason for that is that you got in at the wrong location. So you had the right trade idea, you were going with the momentum, but you entered at the wrong spot. So right now when I'm entering into a trade, I'm always comparing my entry location to the VWAP, to the support and resistance lines. And also I'm thinking, how much does my asset normally move in a day and how much has it moved already? Because if it has moved 75-80% of what it normally moves in a day, there is a little bit less likelihood that it's going to do another 300-400 ticks. So that is something that you always want to think about. Lesson number 8 is that your mind is the market. Fear, FOMO, greed, no matter how long you've been trading, they never fully go away. And now 5+ years of trading, I still experience those feelings, but now I'm a little bit better at controlling them compared to how I was 1 year ago, 2 years ago. So over time, you just get better at managing it, but these feelings never fully go away. And to this day, some of my worst trades are often after some of my best days. And the reason is that I get a little overconfident and I start to let loose of some of my risk management, and I take a little bit riskier trades, and the market always does a good job of humbling you. So every day it's really important that you check in with yourself and see, do you have any of these FOMO, fear, greed feelings? And also, how are you psychologically? Did you have a fight with your spouse? Did you have a bad sleep? All of these really matter. So when you're taking a trade, you want to always be in your best mindset to tackle on the market. So take care of your psychology like it is part of your trading system, because it definitely is a big part of it. Lesson number 9 is to give yourself time. You didn't learn anything meaningful in 3 months, so why should trading be any different? Trading is one of the hardest things that anybody could do, and it should take several years to really master. So if you've been trading for 2 years, 4 years, 5 years, know that you're still early on in your trading career. Now again, like I mentioned, I've been trading for over 5 years, and personally I feel that I'm still very early in my trading career. Trading is a long game, so no matter what struggles you're going through, know that you're not late, you're just a little bit early, and give it time. And lesson number 10, and this is one of the most important lessons on the list, and that is to please stop switching strategies. I have to repeat that one more time. Stop switching strategies. I see so many traders that are constantly switching strategies, and after a couple of losses, they think that there is a problem with their strategy, whereas the problem is not with that. The problem is with their refinement, is with the fact that trading is just a game of probabilities. It's never 100% win rate. So you really need to give your strategies some time to evolve, to get perfected. And every time you're hopping to a new strategy, you're basically starting over. So don't do that to yourself. Stick to a strategy that works and just refine it over time. In trading, consistency and profitability comes to a point where your strategy is refined and you're literally doing the same exact thing over and over again to a point that it becomes boring. Boring is what is profitable. That's when you are close to profitability, that's when you're close to consistency. So yeah guys, 1,482 days since the message that I sent to my first mentor. And I'm so happy that I stuck through all of the pain, all of the trials and errors that I went through in the last 5 years to come to these 10 core lessons that I'm sharing with you. And I hope that by watching this video, you're able to grasp some of these lessons that I'm sharing with you and that it doesn't take you as long as it did for me and that it's a little bit smoother, a little bit faster for you. Now, if you're watching the video until now, there's no doubt in my mind that you are on the right path. And I want you to put a big W in the comment section so that I know that you watched until now in the video, which many people don't do. So you definitely take trading seriously. It is definitely something that's important to you and that you treat it like a career as it should be. So that's it for today's video. I hope that you enjoyed it and you got some value from it. And in the comment section, I'm really wondering which of these 10 lessons really hit home with you. Put that in the comment section. Let's have a little discussion about it. And if you haven't already subscribed to the channel, definitely go ahead and subscribe to the channel. There's going to be a lot more videos coming out in the upcoming days and weeks, and I look forward to seeing you in the next video. See you next time.